What's up guys, I welcome you in this video. I just want to share with you something very interesting. We can see here the market is moving in an uptrend, meaning it is controlled by the buyers, and as it is approaching this area here, we observe something pretty strange. If you can see this impulsive wave going up, you can see that this impulsive wave is not really big. It is not that huge, meaning if an impulsive wave is not big, it tells you that the trend is going down. And you can see our high here, it is a little bit closer to our recent high, and not only the highs or the impulsive wave, but we can also tell from the corrective wave. If you observe this corrective wave, it is a very big corrective wave, and it also formed a low which is at the same level as the previous one. So we can see that this low is exactly at the same level as this one. So it means that the sellers, they are gaining strength and the buyers, they are getting weaker. But the thing that traders will do is that they will observe this level as a support, and they will be excited that hey, price is on the support. Not only that price is on the support, but they will also go further to identify a pattern here that hey, look, we have an interesting pattern, and then now the pattern is getting broken, meaning that we should execute a buying position all the way in that area. This is what a lot of traders will do. They will then begin to open a long position all the way there because price bounced from the support, and also price broke a channel or a flow. The problem about this approach is that you ignore the most important thing in the market, which is the strength, or which is momentum. But you did everything right. You observed that price is on the support, you observed that there was a flow. But one thing that you need to keep in mind, a support is really important, mostly when the market is moving sideways. But when the market is moving in a trend, when you see something like a support, it tells you that the players which are controlling that trend, in this case the buyers, it means that they are getting weak. Because if the buyers are stronger, we are supposed to see something like this, the lows becoming higher and higher, not the lows actually becoming on the same level. Because if they are on the same level, it means that okay, we are likely to see a reversal in the near future. So you as a trader executing a buying trade here, it might happen that price can just reverse all the way up there. Price can just reverse all the way up there and begin to collapse. Why? Because already it is showing us those signs by giving us this high, which is a little bit closer than the previous one, and also giving us a corrective wave which is very, very huge, and also a low that is at the same level as the previous low, which is just a clear sign of momentum dying out. So if you encounter such scenarios, make sure that you don't get tempted to actually execute a buy or to execute a trade, which you shouldn't. Now make sure that momentum is your primary focus. Focus on the strength, and then make sure that you don't go against the strength. So in this case, what you should do as a trader, it is to wait. Wait for what? Wait for two things. The first thing that you should wait for, it is to wait for this that I've illustrated, this line. If the price approaches that area and it begins to slow down, showing you some reversal side, then it means that go short here, open your selling trade. However, if price breaks that area and go up, it means that wait for a corrective wave to be formed. And if you receive a corrective wave, and maybe let's say it starts to slow down all the way here, giving you this as your low, it means that then the buyers will be back in play, and then you can continue to open buying positions. So I'm just going to keep it short and leave it here. Thank you guys.